Hello everyone, this is the continuation of our previous lecture. We previous study about the Marubozu candlestick pattern, and today we will discuss about the doji candlestick pattern. So basically there are three major type of doji candlestick: the typical classic doji, and the gravestone doji, and the dragonfly doji. The characteristics of doji candlestick: it has long shadow but no body at all, as you can. So here it has long shadow and no body. It indicates there is a tug of war between the buyers and sellers, but are in a confusion as what to do and what not to do. This is the typical classic doji candlestick, also known as long ledge doji. This is doji which will you find mainly on the charts a lot. You can see it has long shadow but no body at all. This is the high price and the low. As you can see over there, they're basically sticks, nobody at all. The buyers started hard here to track price up, and the seller tried hard to price down. And the counter closed very close to the opening and closing part. As you can see, the opening and closing part are meet at each other. And this is the gravestone doji candlestick. The gravestone doji candlestick is the basically, you all know the alphabet D. It is the opposite of alpha beta. You can see here, have a look. It has some long shadow, but nobody at all. This was the high price. This was the low, and open close remain the same. Buyers and sellers both were in the confusion to the last one. And the dragonfly doji is like the alphabet T. It is the same characteristics: long body, long shadows, but no body at all. This is the opening price, and the closing and high and the low remain the same. So we discussed three type of major dojis over there. So what is the interpretation of the interpretation is very simple. Is whenever doji is found in bigger time frame on chart, it means the trend is about to reverse. If the market is in bearish sentiment at a rally now up toward upside. If the market is bullish sentiment, it will rally towards downside. And the last one more important thing which I have experienced for my trading, the doji candlestick does not in the market while it is consolidated or in the sideways. Always look for the doji in the trending markets. Always look for the in the trending markets. So let's now to the chart and find real life example. And now I am going to the Solana USDT live chart. Now you can see the here doji candles is appear at this point. Nobody at all, and long shadows is appear, and tug of war between buyers and sellers. And now the market is uptrend. And if this same doji is appear is here, the tug of war between buyers and sellers, and now you can see the that candles. I will zoom in. See the that candle tug of war between buyers and seller, and now the buyers dominate the market. If we can see the other example of the doji candle is the that is this candle is the doji candle, and you can see the doji candle is a pair, tug of war between buyers and seller, price close at very minor point, and now the market is upward due to the buyer dominate the market. I will show you the three examples in which the tug of war between buyer and seller and market is upward. And on second example, the tug of war between buyer and seller and the market slightly upward, but after is downward due to the higher fight each other. And now you can see this doji candle, the price is upward and both buyers and sellers are many confused. These candlesticks basically give us extra confidence to our trading system, and this is known as the language of system, and we must know the how to move the market and know the language of trading graph. We take trades upon multiple confluence, but as the candles, as you showed previously, the language of the market, we have to study them. I hope you have enjoyed, learned. Let's move on to our next lecture.